Hello, guys. In today's video, I want to share a simple and very profitable strategy. You guys can understand this strategy with a little effort, and by mastering this strategy, you won't need the other ones anymore. I will go through everything step by step and try to teach you each and every detail, so be sure to watch the whole video. First of all, open the Tradingview platform and then select the EUR/USD currency pair. Now, set the time frame to 5 minutes for this strategy. However, keep in mind that you can use this method on all time frames, and this strategy can be profitable on all of them. Now it's time to add indicators to our chart. In total, 3 free indicators are going to be used in this strategy. Let's start by applying the first indicator. To do this, open the indicator section on Tradingview and type in the name of our first indicator, which is the Trader XO Macro Trend Scanner. Add this indicator to the chart. The Trader XO indicator provides very simple and clear buy and sell signals that we're going to use for trading. This indicator contains 2 moving average lines. The top line represents the slow moving average, while the bottom line represents the fast moving average. The indicator gives signals when these 2 lines cross each other. If the crossing is downward, it indicates a bearish or sell signal. Conversely, if the crossing is upward, it indicates a bullish or buy signal. Now, how do we trade using this indicator? As mentioned earlier, this is a simple trading indicator that is very easy to use. By considering only 2 conditions, you can trade with this indicator alone. The 2 conditions are as follows. First, the appearance of a bearish or short signal, and second, a candlestick forming simultaneously with the signal being below both moving average lines. When these conditions are met, you can enter the trade after the trigger candle is closed and make a profit. You could have had an astounding profit from this trade. For the buy signal, the conditions are exactly the opposite. If a bullish signal appears, look for a long side candlestick that is closed above both moving average lines. Once all conditions are fulfilled, you can enter the trade after the trade candle has been closed and gain profit without any problem. Let me show you some more examples in different time frames to prove that this indicator is really precise and effective. Let's check out the 30-minute time frame. Even in this time frame, the indicator has given us a sell signal at the best possible point. If you had entered the trade based on this signal, you would have caught a huge market movement and gained a significant profit. We could have made a lot of profit and had an amazing trade. Here we have a buy signal, and the candlestick has been closed below the moving average lines. So we can enter the trade, opening a long buying position where the candlestick has been closed. By using this buy signal, we could have captured a very big market movement and made a substantial profit. This shows the effectiveness of this indicator alone. However, it's important to note that relying solely on this indicator may have some drawbacks, similar to other indicators. When the market enters a ranging zone, such as in this situation, we may receive some fake signals. For instance, this signal here is fake, as well as this one and this one. It's crucial to be cautious and consider other factors when trading in such situations. So, let's learn how to filter out these fake signals by adding another indicator to the chart. Open the indicator options and type MACD to apply the Moving Average Convergence Divergence indicator to your chart. The MACD indicator consists of histograms, a signal line, and a MACD line. Now, let's change some settings of the indicator. In the Style tab, disable the MACD and signal options since we don't need them for this strategy. Next, go to the Input section and change the fast length option to 26 and the slow length to 100. Now, let's understand how to use this MACD indicator in our strategy. If the MACD histogram is below the 0 line, it indicates a downtrend, and we should only enter sell trades. On the other hand, if the histogram is above the 0 line, it indicates an uptrend, and we should only enter buy trades. For example, when we have a bullish or buy signal and the MACD histogram is above the 0 line, it confirms an uptrend, allowing us to enter buy trades. This signal is valid, and if we set the stop loss properly, we could have made a significant profit. Now, let's move on to the next trade. If we receive a sell signal but the histogram is above the 0 line, indicating an uptrend, we should ignore this signal as it is fake and not enter a trade. Similarly, when we have a buy signal given by the first indicator, and the histogram is still above the 0 line, we are still in an uptrend and can open long buying positions. We could have gained profit from this trade as well. To execute the best trades, we need to follow the signals given by both indicators and consider the trend indicated by the MACD histogram. By combining these 2 indicators, we can filter out fake signals and increase our chances of successful trades. To gauge the momentum of the market, we will add another indicator. Go to the Indicators tab and search for MA, Moving Average. Add the Moving Average Exponential indicator to your chart. In the settings, change the length to 200 from 9 and modify the color of the moving average line to white. This moving average line serves as an indication of the market's trend direction. When the price is above the moving average, it signifies an upward trend, and when the price is below the moving average line, it indicates a downward trend. To enter a sell trade, we need to meet certain conditions. Firstly, a sell signal should be generated by the first indicator, trader XO. Additionally, the MACD histogram should be below the zero line, indicating a downtrend. Lastly, the price should be lower than the 200 moving average line. If all these conditions are met, we can enter a sell trade. For example, if our trigger candlestick closes below the 200 moving average line, it provides confirmation for a sell trade. Now, let's consider the conditions for a long or bullish trade. To enter a buy trade, we need to receive a bullish signal from the trader XO indicator. Additionally, the MACD histogram should be above the zero line, indicating an uptrend. Lastly, our trigger candlestick should close above the moving average line. If these conditions are met, we can enter a buy trade. It's important to note that when using this indicator on a 5-minute time frame, your stop loss will be relatively small. However, it's crucial to consider the spread when scalping. To minimize the impact of spreads on your profitability, it's recommended to use a zero spread broker. You can join IC Markets, which offers zero spreads. You can find the link in the description and visit the blog fxtradinger.com for further information.